Hi, Warriors. Good turnaround Tuesday. Some pretty good action happening today. Who's ready? Mike, I know you are. Glenn, I know you are, man. AJ, born ready. Hugo, he's ready. Ingmar, Chris Dunn. Chris, welcome to F.A.C.E, your new name to me. Hi, Ingmar. Let's go. Okay. Ask and you shall receive. All right. Okay. You impatient action junkie, you. Anyway, let's look at markets. Kman and Blake are here with me today, so let's look. Thought I'd start off with victory. Okay, we have a breakdown in the video with the market making new all-time highs. It breaks down, not a good sign, unless it ends up being a false breakdown back over 32 and a half. And I just want to show you guys the big picture of what I'm looking for. And I don't think it's a great sign for the market when it's the market leader for a few years. I mean, here, all the way to here. So the way I'm looking at it, here's your weekly, is that this was really the high, 5, all right? And we had a break from, 140 to 90, $50. And this is an irregular B. Some people would say it's a 5, but it's an irregular B. And what you can get from an irregular is a fib extension of this. And so this was $50, right? So call 1.6 approximately is $80. From 52 gives you 72. So that's my longer term objective. I think I'll see it um, sometime in January, February, if this breakdown follows through. There's a few stopping points. There's some at like 116. But the measured move from this is 112 if it follows through. Probably a stopping point, and then under 112, look out. All right. So let's get to currencies. That's our bailiwick. And start off with my trading warrior brother, Kman. Good morning to you, buddy.
Good morning, Dale, Coach. Good morning, everybody.
Good morning, man. Yen kind of has a feel like it's going to roll over. I don't know if that was a fib yesterday
Mm,
or anything. Did you have anything up here at this high that was
no,
significant?
no, no. Well, one could argue. Yeah,
448, 4.5 about. Yeah.
yeah, well, one could argue it's perhaps some prior highs, but no, I didn't have anything really special. We are now trading on a bit of a zone that I had around this 65.80, 153, 65.80.
Yeah.
That's a bit of a level here. The low held so far of that zone, but it's all speculation now about the FOMC versus Bank of Japan, I guess.
What would be the results of a Fed and BOJ tightening?
Oh, then dollar yen could go lower, but there is this possibility
Fed,
of a very hawkish FOMC despite cutting and a
right.
very small hike or even a standstill. Actually, the speculators polled by Reuters are saying 90% of them are saying that the Bank of Japan is going to hold rates still. I personally think that the risk for a bit of a small move is higher than that, but yeah, I think could go a little bit lower. I'm really starting to think the market is like just trying to be patient and get the FOMC, Bank of Japan, perhaps even Bank of England out of the way before really starting to trade again.
Okay. All right. Well, that happens, especially you've been through these Decembers, quite
Yeah.
a few, quite a few of them that, it's yeah. I don't think big trends start in
No.
December.
No,
right?
because there's too much unknowns going on in December, right? You have the year end, you have the bond
Yeah,
market needing to rebalance, you have FX neutral funds needing to do their stuff. I mean, it could confirm a trend if the flows goes in the way of the trend. But is there really a trend right now? Is the question. And yes, there are moves, but is it a trend? That's really the big question, and we will probably only know after the end of this year. And it's a bit of a strange one because you've got Christmas, New Year falling in the middle of the week, and
yeah. Yeah.
that makes all those trading sessions like condensed, but potentially very explosive.
You know, talking about yields, we're almost back here at this last swing low. They better turn them here. I don't see. Yeah, well, I'm starting to get a little divergence, still under 30, but I'm telling you, you know, there are. I mean, most. I think the setup isn't the greatest through COT. I mean, there are a lot of shorts. I don't think that it's a crowded long trade.
Yeah,
So
and if you
go
look at the
ahead.
yeah, and if you look at the 10-year, we're closing in now on the
Yeah,
61.8 of the big correction from 5% down to 360.
yeah.
We are back at the very close there to the 61.8, and it's always been a bit of a traffic zone. So I think this 448, 450, we need to pay attention to it as well. But again, um, is it all just pre-FOMC? We do have the last test coming up today, the retail sales, because the consumer is always very important. Um, but yeah, it could be that the bond market is forced to take it through. You know, I
Yeah.
really don't know what the bond positions are right now. I don't know.
Yeah.
I can only if I would take the whole package of data that we had, 4.5 is enough. It should be enough. But then you have like, what is Trump going to do? You know?
Yeah. You know, maybe if they can turn it back here, you get some type of ABC, but this is not a bull, you know, down here I was still thinking rates were going to go like, I don't know, 320, something like that. But
Mm,
when we started getting back above 420, and it's kind of like the dollar. I mean, it's almost the
mm,
same thing. They're beach balls.
mm.
You can't
And
keep a
very,
good beach ball down, huh?
yeah, very hard to keep it down right now, especially with the prospect of what is still to come. You have that FOMC tomorrow, and then um, Trump coming in. But in between, I would just take the opportunity to just say what I've noticed yesterday, and that's yesterday the 4 p.m. London fixing. And that's a bit of a first in this December where it was really clear that there were dollar sellers around yesterday around 4 p.m. London fix. So that's what I was talking about on the flow show as well. I would advise everybody to keep the clock close to hand now from now until the year end, actually.
You know, kind of picked up on a little tone in your voice, and then you said something like Trump. How do you like trading during his first term?
Um, I was, it was sort of okay.
Okay, all right.
Um, Sort of okay, but
Well,
yeah.
that's no trip to Hollywood.
The
Let's go to Disneyland.
yeah, that's it, or more like a fun fair, you know.
Yeah,
And always expect some tickets to come out of the machine because he
yeah,
was tweeting
yeah,
the his first term
yeah.
away, right?
Yeah, I heard he opened an account at Robinhood yesterday. Anyway,
No,
uh,
but
huh?
he certainly got a subscription at SoftBank to get a new phone
Oh,
yesterday.
yeah, he's got they gave him a trading line.
Uh,
Um, so top of mind going into the Fed tomorrow, bro.
um, hawkish gut. Dollar dollar in general stays bit into, and then we will see because To me, there is a bit of a risk of a buy the rumor, sell the fact coming up.
Getting a nice candle in the gold right here, and
Uh,
also the silver. I don't
yeah.
know. It kind of feels like it's worth a shot for a turnaround Tuesday.
Maybe,
Um, yeah,
maybe today, maybe tomorrow. It's one of those
yeah,
trades where you can have a real sell the rumor, buy the fact kind of thing. Because you look at gold. Of course, it's. I mean, if you look at in percentage, it's still like 1.5 or so. But gold can move relatively quickly. We're coming into very interesting zones soon. Anywhere between 26.20, 26, 25.90, I think is going to be very, very important.
okay. New highs in Canada
No good news at all coming out of Canada.
and new lows in Aussie,
Yeah,
but barely, but barely.
yeah.
So if I had to choose between shorting Canada and buying Aussie, I'd be looking more to buy Aussie because the
Mm.
momentum's starting to shift here. Uh, and the momentum is still, it's on the verge of blowing out any divergence up here. So
News
I
like
know
the
you were looking at Aussie
yeah.
last week. What zone though? We're
Ah,
getting
well,
closer.
this is the zone, but I'm
Yeah,
trying to be patient for another day, you know. But it's always the same. Like either you press the button. I could actually see myself do like a very tiny bit just to fight FOMO or fight
yeah.
just to have something in it. But I'm for sure not going to do anything silly before the FOMC.
Okay. Well, I think that because of what the action for metalheads, guys, XAU gold silver ratio still looks good. Yeah, it could pull back, but I wouldn't be fighting this, which tells me if you want to play a precious metal pop, it should be gold. Should be your preferred long over silver. Okay. So give yourself the edge. It's like, Euro pound, right? Nice short, Blake, in Euro pound. We'll see. This is an area. I mean,
I
if you're
am.
bullish, you're short.
Yeah, I am.
Yeah, okay. You looking for new lows or
Oh
what do you
yeah,
think?
I mean, I picked up again where I left it with my thought that we may see the low towards year end.
Okay. All right. Low profit taking and risk. Pretty good profit taking. Maybe we're going to challenge a 60-30 level. When you think about it, and I'm kind of kicking myself that 6100 was a number you know we talked about here for months just based upon the formation of on the weekly that was a measured move off the breakout at 4800. So it was 34 to 48, 61.
Mm.
And it hasn't been able, I know the NASDAQ's been blowing off, but so far 61 is holding. And I'm telling you that no one's short, not even the bears. Most of the bears are waiting for, this upper end of the line. I hear, 62 to 64 from the guys that are, talking about big breaks. That's where they want to do it. They're not in. So we'll see. Maybe the shorts are going to have to chase it too. We'll see what happens at this line here, but I think we're set up for a 2 week reversal. It's not going to take much. It's closing under 60.88, so we're already 40 handles under the close from 2 weeks ago. So if we close under 60.88, we have a 2 week reversal, and we haven't had one of those in quite some time. Okay. Um, Something to keep in mind. What do you think, Blake? Can they get to it now?
About the S&P?
Yeah.
I'm sorry, I was just in the process of answering somebody's question. Um, I'm sorry, could you I was listening just a minute ago. I just had to
Okay,
Data.
no one shorts. The bears are waiting. Most bears are waiting for 62, maybe even 64 up at the top of the line. And here we are down here in front of the Fed. Could we break down here?
Um, first of all, I think 60-30 is the big breakout point. So
Right.
while we're above that, which we're only 20 points above it right now, I wouldn't be too terribly worried about anything at the moment. But we do have retail sales today, but the Fed's going to be the determining factor, right? Um, that is truly going to be the determining factor on whether this market goes higher or lower. It's what is the Fed going to do tomorrow? And I don't think the retail sales today is going to be it. I don't think that's what's going to be the make it or break it for the equity markets right now. Period.
Okay. Well, the market, I mean, market's been talking about kind of a pause or a hawkish cut now for quite some time. It should be in the market, but it may not be. To us, because we're hearing everything, it's in the market, but it may not be in the market if they go that way. So we'll see. I guess that's it. But 60-35, keep your eyes out for a weekly reversal. There are some unusual things going on. So,
Well, I mean,
uh,
this is and Dale, I just want to point it out. This is the level that I think
yeah,
everybody
I
should be
see it.
watching right here.
Right,
It's
right.
I mean, it's the big one. It's big one I say for the week. That's the level that we should all be watching. You guys were talking a little bit about or just a little bit ago, you guys were talking about the yen and you had asked, is there any level that we were looking at yesterday that would have suggested that we might have rolled over and Kman was like, no, I don't, there isn't any level, and I didn't see any level either, although I do think we're in an ascending wedge, and an ascending wedge by definition is a reversal setup, not isn't a guaranteed reversal pattern. It's just a setup for a potential reversal. I think what's interesting about the yen where we're at right now is that we're basically on ascending wedge support, today's lows. And so if you think about that and then you think about the data that's coming out, that's going to be important because we have retail sales data that is it could be the driver of what's happening with the dollar, but also with yields. And this is the other thing, if you were in the Forex Analytics chat room, you're already aware of this because we were just having a conversation a little while ago regarding this. um, when you look at yields, and yields continue to grind higher into resistance, we filled the gap from a couple weeks ago. We're overbought intraday, but if yields are going higher like they are right now, and it's not dragging up the dollar yen, that is a bit of a risk for the dollar yen, especially if let's say data comes in poorly and retail sales are expected to beat on both the core and retail and headline number. If that comes in a little weak, maybe yields come back under pressure, and if that happens, then I think the dollar yen should be in focus too. I think that's something that I think is a big deal. I also heard you guys talking about euro pound, and yeah, Dale, I was short euro sterling. I actually shorted it last week, and then I shorted it at the end of last week when we got to the 618 retracement, and I covered it up yesterday. Kman mentioned that he's short. Where did you reshort the euro sterling? Because I know
Just
I know
below the
you
figure.
closed out of it before, Kman.
Just below the figure.
I'm sorry.
Just below the figure. Just below
Oh, below
83.
83. Got
Mm.
it. Yeah, I pulled mine off yesterday, probably right when you covered yours. I pulled mine off just because I got a little I don't want to say over my skis, but I got a little too aggressive in my short up here. So I just pulled it off just to get it off my screen since I'm already long sterling. But we had some good UK data that came out overnight and some good jobs reports, right?
Yeah, yeah, yeah.
So
Great.
what happens? I mean, you got the UK jobs report that comes in better than expected. You got the Bank of England tomorrow. You got CPI on well, CPI's tomorrow. Bank of England's on
CPI
Thursday,
tomorrow.
I believe. So what's the Bank of England going to do when they see, I mean, shoot, we were supposed to have uh, uh, these jobless claims number come up kind of aggressively. They didn't. Earnings index is way stronger than expected. I mean, is it going to keep the Bank of England on hold?
I think there's a real risk if CPI doesn't come in lower tomorrow. There is a real risk.
Well, we've been seeing inflation fairly sticky around the
Mm.
globe, right?
Yeah, but they had a reason last week to potentially come with a cut on that Q3 GDP, which came in negative, right? But that is already in the rearview mirror now, and the actual numbers, Q4 numbers, are not of the sort of coming with a cut. So tomorrow, I think CPI may just be the clincher for the Bank of England. But if that comes in a bit sticky, they are not going to cut, I think.
Yeah. So that I mean, we could literally get the sterling, spiking through this.
Yeah.
This is 127.10, 127.12. Um,
Now
yeah, we
just
start.
look above there, that red line. That is my zone there. The
That's the 618
127.35.
retracement. Yeah, yeah.
You want, can I borrow that zone every once in a while? It's yours.
It's
I
just
I
his.
ask,
It's only
I
his.
ask, I
No one
asked before
else's. No one else's, Dale.
all right,
No,
I just want to know if I
no,
could
no,
use a,
no,
all
no,
right,
no,
I
no.
put white out on the numbers.
Have
All right.
mine, Dale. Have mine. Have mine. You can have mine. You can have all of it. All of them.
Oh, okay, cool. I feel like grateful. All right.
Yeah, I do think that yeah, we start squeezing above the 618 retracement. Then next thing you know, you've got pre
Lost you, Blake.
618. Next thing you know, you're trading back up here. Yeah, I like Sterling. I think it still looks great. Technically we had this, channel. We came back, retested the channel. Yeah, I mean, technically it's doing what it needs to do, especially in an environment where the dollar, was pretty damn strong. But speaking of which, we had the euro slump back below 105. It does seem like we're range bound ahead of tomorrow's FOMC. But we did have some German. Did we have was it IFO last night data that came out?
IFO and Zoom and Zoo, both
And
both of them came out.
ZEW, yeah, ZEW numbers that came out. Yeah, I mean Germany's, uh, you know, uh, Germany's an absolute disaster. Speaking of disaster, look at the dollar CAD. We have the Canadian government. Now. Canada's deputy finance minister is a finance
She
minister.
resigned. Yeah.
Yeah, she resigned, but there was a couple other cabinet resignations at the end of last week, and so I mean the Canadian government looks really, really in tatters here. But I mean, we just hit 161% extension, and I don't know. It looks kind of scary, but we could have one of those similar situations to the the Eurozone. You announce a snap election just to get Trudeau out because he's 9 years later he's I think his time is up, and maybe the Canadian gets a snapback rally. I don't know, but I think people are definitely worried that that President Trump, as he comes into office and he wants to slap on 25% tariffs into Canada, that could be a really damaging for their economy, and you can obviously see it in their currency because the Canadian currency. Dale, we're almost to those levels again in the dollar CAD, where you're going to start to see prices change on the inside covers of books. You remember that?
Oh yeah. Yeah.
When you'd be at the bookstore and it would say $1 US,
Right.
$1.40 Canadian. Yeah, they're gonna have to start like adjusting those prices again on books. But anyway, the fact of the matter is, you look at the Canadian currency, and these are levels that we haven't been at obviously in years. But yeah, you start getting above 146 and you're at levels you haven't seen since 20 years ago. Pretty scary stuff if you're dealing in Canada. Kman, do you have any opinions about the dollar CAD here?
Yeah, I mean, I'm who are we to stand in front of it? I mean, all the news coming out of Canada right now is not good. They're at risk of missing their budget targets. Trudeau is wobbling. He did name nominate or this LeBlanc person who is the security minister, if I'm not mistaken, in Canada right now, and I think that's a kind of a move to try to get closer to Trump because he was the one that went with a negotiation team to Mar-a-Lago about a month ago, just after the elections, to talk about borders and things. So. But I mean, I don't know him at all as a finance minister. I haven't got a clue. But then missing the budget, missing targets on car making. I mean, there's very little good news out of Canada.
Right. It's scary move. I mean, you could, argue technically that it's divergent and we're, at resistance, but man, it looks like almost a runaway freight train at this stage. But obviously things can change. We have the FOMC and Canadian CPI, which could come in a little sticky today. Just data that could move the markets. But right now it looks pretty weak. You were talking a little bit about precious metals, and I want to say, Dale, this is a nice little head and shoulder pattern that's developing here in silver. You look at silver, it's obviously underperforming gold, but gold looks a little heavy. I know Steve just did a blog on gold just a few minutes ago, but you look at gold, it looks a little weak. Silver looks a little vulnerable, but what doesn't look vulnerable is Bitcoin. Look at Bitcoin, and Bitcoin's at challenging channel resistance, and it just continues to grind higher. What a monster this Bitcoin is, isn't it?
Yep.
Yeah, it is crazy. So anyway, we got just a few minutes before the US data comes out and Canadian data. So I'm going to go ahead and get prepared for it. So I'm going to grab the data flash, and I'm actually going to move that over. So you got Canadian CPI, US retail sales, got some housing data out of Canada as well. Let me move that over back on the live squawk feed. Actually, I am going to pull up these three charts. Let's pull up we have yields in the middle. We have the S&P over here to the right, and I'm actually going to put the dollar Canadian over here on the left since we have Canadian CPI, and we can get a view of the dollar that way too. Before I continue on, Kman, anything that you're looking at today that's like hot on your radar at the moment?
Yeah, kind of bit of Swiss weakness. Swiss government has revised inflation and growth outlook further lower. That comes on the back of that SAB cut. So Swiss, barring big year-end flows or so, is still looking a bit weak for me.
Man, that pound Swiss breakout is nasty. I was long and I got out for a meager profit, and I didn't stick around for the breakout, which man, that thing is breaking out aggressively this morning.
Have
Man,
a look at Sterling CAD if you think things are ready to break out on the long term. Sterling CAD, if that goes, it's a major breakout.
Dale, we have just a minute before the data comes out. What's hot on your radar today?
I'm gonna for new stuff. I have a yen floater out there. That's it. I'm still holding, short cable, short euro, long dollar.
I did get short dollar yen yesterday, Dale, with that ascending wedge. So if we break through today's lows, I'm going to be adding to that. So just that you're short, right?
Yeah.
Yeah, I got short yesterday. If you guys are in the Forex Analytics chat room, you guys already knew that. I've been in it since about 154.05, and I agree with Kman. I still think that there's risk that the BOJ does move slowly, but if they move, I think the market will take notice of it. And
I think there's a chance it yields. At least there's a little bit of a pause in the
Oh, I think
pressure.
yields will come down here. Yeah, and
Yeah,
too, I do. But
that's
we'll see
part
it
of the
in the
reason.
data. Let's
Yeah.
look at U.S. retail sales coming up right
Okay.
now.
Lower Canadian CPI.
7% retail sales advance month on month. X also coming at 0.2.
Wow, look at
Zero
the
point seven
0.2% as well.
for the
weaker.
retail sales, a little better, but no impact.
But look at the retail sales, the core number. So is that what's hitting the dollar right now? I mean, you know, you've got the core retail sales that are slumping, and that's that's hitting the dollar at the moment. So Canadian median CPI year over year came in hotter than expected. Even their core CPI year over year came in hotter than expected. Just the month over month number came in slightly weaker, but yeah, interesting. But you're seeing yields come down, I think, because you know, you have retail sales. They are the number came in, you know, everybody's looking at the headline number and saying, oh, that's a good number, but you know, minus you know, autos and some of the big ticket items, it's weaker than expected.
Are you
So
spending as much on Christmas as you normally did?
ask me 2 days before Christmas, because that's when I usually go crazy. So
Like,
can't ask me that
minute.
question right now. I'm a Christmas gift
Impulse.
procrastinator. I'm not.
Oh, yeah.
Yes, I'm a procrastinator.
So you don't impulse trade, but you impulse shop.
Yes, that would
Okay,
be
good.
that'd be a correct statement.
Better place to have impulses because at least you have something.
Hey,
Right?
I want to mention this, guys, before Dale takes over for his interview. Our holiday specials are out for ForexAnalytix. Buy 1 month, get 1 month free, or 40% off semi-annual, not annual, semi-annual. We've never done that before. 40% off semi-annual subscriptions. That is a huge savings. I mean, literally huge savings for not that big of a commitment. So check out our holiday offer. It is out and live. All right, Dale, it's all yours, buddy. And thanks, Kman, for covering for Ryan.
Cheers, guys.
Take it easy, Kay. Thank you, Blake. Dream
Thanks,
team,
Coach.
the Three Musketeers. And the analytic part of the show is over, and now we're bringing in someone who really has great technical ideas. Every time I talk to him, Zach Manis, how are you, buddy?
I'm good. How are you, Dale?
Really great to have you back. It's been such a long time and so much has happened, mainly the elections. Has that changed anything since early November, like counts that you had going into it? Did the election reinforce them, or
I think
did
getting
you?
over the resistance that we were looking at back in November for a possible B wave put us into extension mode in the market. And then it's just been tracking and heading higher. And you guys were calling it like a narrowing wedge pattern. We've been looking at the subwaves and the broad market and calling it a non-overlapping ending diagonal.
Okay.
But until we break any serious support, you know, then, you know, we're looking for possible further extension. Ideally coming into a possible top, but it could only be the top of a third there.
Yeah, but you could get a pretty nasty 4.
Right.
Right. So that's why people are stalking it, even if it's a 4. And I wanted to ask you while you're sharing the screens, you know, you have the bears who say, you know, they think this is it. And then isn't it possible, I saw a count where we could peak here for a 4, trade back to 4,900, and then go to over 7,000 on the next rally. Can you see anything like that happening?
It's possible. I think 7,000 is a little bit extreme. I mean, I wouldn't be surprised if we got up there. I wouldn't be looking at it as a
Well, I'm talking about 4,900 first.
Oh.
Okay, from in here, 62, wherever we peak, is that we get a pullback to wave 4 of lesser degree. As 49.
I think if we start to break under the 5,200 region, it starts to get less reliable that we're going to that we are going to head up higher. Oh, here we go. Here's there we go. All right. Oh, so I had that on
Got
gold.
it. Got it.
Um,
Okay.
I'll go over to the S&P and we can talk about that first.
You think, oh, well, we're here. Let's see. Okay. All right. So you have 5 up there at 62. All right.
Right. So the support for this very, very extended ending diagonal off of the October 2022 low. So the alternate way that Garrett is leaning more towards is that this is the wave one instead of back here, and then this is an A, B, C up for wave three just now trying to complete, and that could even get another 4 or 5 closer to the 6300s. But then you can come back down, and 4900 would certainly be still valid as a fourth wave. I just think if we're going to hold as a fourth and get another push higher, under 5200, that gets less reliable. Certainly still
Okay.
possible, but not something that would be as certain. A lot of other things would be breaking some pretty key supports for them to get further extension there.
Okay.
But at the small degree, I like that same level. At the very, very small degree that you guys were talking about on the ES, in terms of another 4 or 5 of this C wave inside that minor degree fifth, that you still have the 5800s in the S&P as possible support there.
Okay. All right. So it does look like even if this is a 4, you're going all the way out to 26, 2026, 3200, one big ABC.
Yeah, I mean, I think this definitely pushes a lot further out in time.
Yeah.
As we've extended and compressed that.
All right.
So, but yeah, that's I mean, I think whatever top we make at a larger degree puts us into at least 5 years or more where we're just getting volatility and trending more sideways as we chop down to retest some of those numbers, at least that we saw back here in 2022 and very possibly back here from 2020 at the least.
So this is no longer an expanding flat because it's gone too far?
Yeah, it's once here you could have still been a B wave of an expanded flat, but the degree of consolidation that I think that this really should be if we're coming into a more significant top. Whoops, didn't want to go to it shouldn't be an expanded flat this early. If this really is a super cycle degree wave 3 topping, then the super cycle degree wave 4, should take quite a while, and that itself can be an expanded flat. But that you wouldn't have an expanded flat so early on inside a larger A wave. It's just not very typical.
Okay.
But
I
we like
wanted
to
to
keep an
ask,
eye on the RSP also because I think there's been some divergence there lately,
there
and
has been.
sometimes that tells a different story.
Yeah.
But you can get the same, where this is a slightly larger. I mean, this still counts as wave 2, the low here. If you're not counting it as an ABC for wave 5, if you're giving this an impulse, so then this whole thing can be an ending diagonal that gets 5 waves. So again, you can come down towards the 160 region, maybe even below for that 4, and then get another move up towards the 200 level as a 5th wave if this is not the more significant top. The difficult thing is that even the start of a bigger consolidation, either this A wave or the possible wave 4 are going to be a similar looking ABC correction. So, even if you think that it's a bigger move starting, you see an ABC down into the 160 to 150 region, you still play that long for what you hope is just a bounce, or maybe you hope that it does extend to wave 5. If it's clearly a corrective bounce, then you take some precautions. If it starts to get more aggressive, then you look for opportunities to press that on some dips.
I wanted to ask you something. NVIDIA was a star. It was like as famous as Bitcoin is now a year ago, right?
Yeah.
Wasn't it a celebrity? And I show it breaking down now. I'm bearish. I was wondering, can the market survive the largest market cap company? And I think that's why the Dow has been weaker because
I
they
mean,
moved
I think in a
NVIDIA into the
vacuum,
Dow.
I don't
Huh?
think that one stock makes the market, but I think one stock is kind of like, it's the mascot.
Canary.
Right, exactly. But at the smaller degree, we're following this ending diagonal pattern off of the August low, where this should hold the 124 region as a fourth wave and then get one more push up into the 160 region.
Okay. What's about alternate bear case?
What's that?
If it doesn't hold that, if it doesn't hold 124, because actually
I
it
mean, it's
it
filled out,
measures 112 to me,
right. I mean,
the
it's filled
formation.
out at all of the other degrees. It looks very, very complete in this cycle wave 3. So tracking this is just an ending diagonal extension post the split and further extension. There's a similar pattern actually in Bitcoin, for that to hold a fourth and get one more push up before it consolidates. And I think you even have MicroStrategy also that is filling out a similar fourth wave and then sets up for one more push higher.
With Bitcoin.
Also, it's post split, so that can be more bullish long term. But this is certainly finishing up a pretty stellar long term move, and huge move off of the 2023 2022 lows. But one more 4-5 and it's hard to argue strongly for much more than that.
Okay. You had gold up in the
Yeah.
beginning.
I actually still think that there's some potential for silver to outperform gold. But so far it's certainly being the weaker of the two metals. But at the larger degree, would still like to see gold make one more high up towards the 3,000 region. It's possible that just nominally getting over the 2,800s from the October high is enough to complete all of that move, but it should make an attempt. I do see the same thing that you guys were talking about, that more bearish potential where this was a more significant top and this is some sort of B wave. But you didn't get high enough here in December for this to be an A, B, and a C and starting the C wave down in gold. So even if this was more significant and the larger three topped and you should try for more of a B wave bounce, and then come down as a wider flat. So I'm looking for the 2650 to 2630 region to hold in gold and at least make a play back towards 2800. And then from there can hold support again and head to 3000.
Would the miners participate? Because they certainly didn't. And are they just still victims of tax loss selling?
I think that can be a lot of it. GDX has the same structure off of the November low here as this wider flat, but it can count as a 1-2 start in something bigger. Maybe I'm a little bit biased because we run an entire service that's dedicated to the metals, miners, and agriculture. But this structure, there was not a lot of clarity off of this low in terms of a clean start to the microwave one of this third. So it filled out the same wider flat, just like gold. But holding that 618, it could drop down to 3560 to tag that 764 retrace. But holding a higher low off of November as this wider flat, and that's an expanded flat also. So that the Elliott wave implication, because that micro B wave made a higher high, even nominally, is that the underlying trend is stronger to the upside here. So if it can turn around off of this 36 region, can get a pretty quick move up towards 42 as a third, and then another 4-5 from there can be a bigger wave one in the start of a really nice extension that I think could be taking the miners towards the 60 region.
Wow. Okay. So that's a big value trade down here to stalk.
I mean, certainly the risk reward off of the
Yeah.
November low is pretty stellar, and that starts to deteriorate if it can't hold that 35.60. So if you're looking at even a tighter risk reward from this support region, then it seems like a pretty phenomenal trade.
Okay. Does it tie in with the dollar peaking?
I do see a lot of weakness coming in the dollar. We got this higher B wave alt, which if it's complete, which I would like it to be, but it has to count as an ABC for a Y wave. So the proportions here don't look like a 1, 2, 3, and a 4 and getting a fifth wave up. It's not so common that your wave 1 is the longest wave, and then your 3 and 5 are successively shorter. It's not against the rules. The only rule in Elliott wave really is that wave 3 can never be the shortest. Even in a diagonal, that's the one rule in Elliott wave that can never be broken. So if this is getting a fifth wave of this yellow C, then it's going to have to be shorter than this move that you'd count as the third. But I think this looks better counted as a WXY that just took it right up here to the 618 or pretty close enough. And you can count 5 waves down off of that. So that wouldn't be wave 1 of a bigger drop. That would be wave 1 of a possible bigger drop starting. In the smaller degree, can get another pop up towards 107 before that tries to turn down in the third.
Okay. I think the high was 108 on my platform.
Well, right, the high here back in November. So I'm talking about just one more pop here towards 107 for more of that wave 2.
Okay. All right. Anything else top of mind for you going into next year? Your overview here, Zach.
My overview, I still like oil and gas. Looking for those to hold support from moves up off of the September low. Getting a little bit deep at the end of this consolidation, but we are just barely under the 618 retrace on XLE.
All right, this is uranium here.
But we really do like the uranium names.
Oh, okay. All right.
They look very, very strong. This is part of a nested setup that goes back. There's a primary degree and then also the intermediate degree 1, 2. And now we can count 5 waves up for wave 1. Some of the individual names count better as a fifth wave here. They got nominally higher. And so those might just be the A wave of a wave 2. So they could get a B wave bounce and then a C wave down in more of their wave 2. URA, the ETF here, looks like it should get a fourth and then a fifth wave down towards that 27 region. But that then provides some phenomenal long-term risk reward off of this August low for some bigger moves. So if it starts to break under 26, then this high back here was an alt fifth wave of the larger primary degree, and it can be coming back down to test the 20 region. But so far, it's looking very nicely corrective off of the October high. Is a nice consolidation.
I'm gonna trade that. I was going to ask you. What was I going to ask you about?
We still really like Tesla long term, also, but it's due for a little bit of a breather.
Okay. Oh, I was going to ask you about TLT I want to ask you about the move index. Okay. So everyone's saying, well, not rationalizing, but saying that the bonds should be bought because they're coming down with the move index not even moving, which means there's no stress. It's kind of like the VIX saying there's no fear, but there's no stress and we keep selling off. It's not necessarily bullish TLT, is it?
So I track the futures, the ZB futures on my data feed. It's US, a little bit closer than TLT. I replicate the same count on TLT, but I trade TMF and then I trade the ZB futures more than TLT itself. There was a chance that this was all of a double bottom here for this fifth wave. But once we broke under the 117 region, as a corrective retrace to head immediately higher, it looked more like this was just a fourth wave and we're coming down in the fifth. but there's a lot of confluence for support in this 114 to 113 300 region as a wider flat off the December high. So a big ABC expanded flat for this B wave, and at least sets up a measured move. Garrett and I disagree whether or not this can be the A wave and the start of something heading to potentially new highs for bonds. But we're both looking for that swing move up towards the 134. On TLT, pretty much looks the same. Filling out, I just don't have all the subwaves filled in. Zoom out one more thing there. So same measured move up to 109 to 114 would be the most ideal. I think heading, because you have the B wave that made a nominal higher high here, then
Yeah.
pushing up towards 114 and TLT would make more sense. But that you're going to need to see the wave one get closer to the 97, 98 region to have a better shot at the C wave getting up towards 113. So
Because that was a pretty ugly week for the move index not to move last week, right?
I don't know. I'm not familiar with the move index. You have to
It's
educate me.
yeah, it shows stress in in the treasury markets.
Okay. Have you
So
tried counting waves or looking for patterns on that, or it's just
uh,
more of an oscillator?
I think it's like the VIX.
Okay. All right.
Is what people are saying. Only I guess there's a difference between fear and stress. I mean,
Right.
I'm stressed all the time, but I'm not afraid of it. I'm used to it. Anyway, some great looks, Zach. So I think we're going to have a good trading year. How did you like trading under the first Trump presidency?
I mean, COVID volatility was amazing. It was phenomenal for subscriptions when everybody was working from home
Oh,
and the markets were
yeah,
going haywire, and it
yeah,
was some of the most fun trading, day trading opportunities because you had moves that were setting up an Elliott wave as swing wave moves that were then playing out in 3 or 4 days, which was much more of like a day trade or a scalp.
yeah.
So, if we bring back some of that volatility, even if it oscillates and ends up net positive, to the upside, just chop, tends to be more fun than, constant grind.
Okay, all right. So you're going to have your best 4 years, buddy. And I really appreciate you coming here every quarter, Zach, and sharing your great counts. There is as many Elliott wave patterns as there are analysts, and I talk to a lot of people that do Elliott, but I always come away with something like your post on the uraniums because I've been watching them for a while, but it looks
I
like
mean,
you could have watched them for a while, and this is going to be a pretty important
right.
inflection point for them.
We just did our Stockways webinar on Thursday. We did a deep dive on looking at a lot of the individual ones, some of the smaller ones that we usually only cover in the metals, miners, and agriculture service. And it's an
Yeah,
interesting mix of the ones that lean more to this being a 4-5 that didn't really get as much. Here you have a very complex consolidation into the 2023 low. Didn't quite get deep enough into that 382 to 618 ideal fib support region to be the most reliable for all of the primary degree at the time.
yeah,
But then once you got this fifth wave up, that could have been the fifth of the extension, which some things like CCJ was
yeah,
leaning a little bit more towards. There's a few other things where that look a little bit more like this is the fifth of the bigger primary wave one. But then, you know, that was the look a couple months ago. But then once most things got 5 waves up off of either their July or August lows or some of them
yeah.
off in September and are holding this corrective consolidation off of that high, really looks, over 34 should be a pretty massive breakout in a lot of these.
Yeah, it looks like Bitcoin did before it broke out, like a handle there, cup and
Oh, yeah,
handle
yeah,
a little
absolutely.
bit.
Absolutely.
Well, I hope you have a great holiday and great year coming up, and we get to talk along the way next year to a change in a lot of things happening. I'm sure that there's going to be massive trading opportunities over the next 4 years. And you mentioned you're covering. I'll need to see a chart. Are you looking at the grains as potentially putting in significant lows?
A lot of them seem to be trading at
Range?
low ranges, but
Yeah,
the patterns are, there's completed patterns to the downside.
yeah,
There's not a lot of constructive off of lows yet. We have been tracking cattle futures and
okay,
trading within this structure, heading higher for more of a third in a diagonal.
yeah,
And this D wave up, and it's been filling out really nicely. One of the things that Garrett and I have noticed, which, if we ever write a book, our own Elliott wave book, is that the C waves inside thirds of diagonals often tend to turn into diagonals themselves. And so, here's another good example where we're seeing that, have that ABC structure up for wave one, AB structure inside wave three, and then we'll look for that 4-5 up towards the 199 to 203 level for cattle.
okay. So people are interested in how they could follow you, get involved with you. Zach, you want to show them? You could give them a
So
website or
at Zach Mannes,
okay.
ZACMANNES on X or Twitter. And then the Stockwave service and the metals, miners, and agriculture service on ElliottWaveTrader.net.
ElliottWaveTrader.net,
Uh-huh.
led by Avi Gilbert, right?
Absolutely.
Okay, and so he has guys like Garrett. What a strong team, So uh, great talking to you again, Zach, and
You, Dale.
yeah, some interesting counts, and you've provided me with ideas. I appreciate your giving nature to do so. Thank you.
My pleasure. Have a great holiday season.
All right, Zach Mannes, everybody, check him out on X at Zach Mannes, and he's really a great wave guy, and he's got a pretty calm demeanor. And this pullback in golds, I'd like to see what he's looking at for buying some what issues he's looking at, because I don't think we're that far away either. Even though I think we could see 27 silver, 27.50. Hi, Lorena. Okay, everyone, have a great day. People are thanking you, Zach. And that's going to be a wrap. Don't just count your pips, count your blessings. You're welcome, Lorena, Ingmar, all you guys. See you tomorrow. Good hunting. Blessings. May they run after you and overtake you.